of my Wednesday show talking about my watch list. As again, always read the disclaimer. I do enjoy doing this show. It's for entertainment purposes only. I definitely appreciate everyone who has tuned in. If you've never liked, subscribe, or follow our channel, I ask you to do so. This helps as well. Share it with a friend. This allows the algorithm to pick us up on YouTube and is also share out our content on that plays on our channel. From whether we're doing any type of film or the slate on Friday, on Monday we talk about business, some of the things you should know, and especially today, which I go over kind of my personal watch list. Now, this is my personal watch list. Make sure you do your own due diligence. But today, I got to talk about a stock that I actually had on my watch list and I took it off. And that is going back to a good conversation back on February 15th. If you go back and watch one of our previous videos, check out the February 15th video, you would notice that I was talking about a company by the name of Bumble. Now, at the time, Bumble was trading around $26. I still had it. I did my due diligence and I was looking at the competition, talked to a couple of the companies that compete with them, especially like Match.com. We have some other ones as well that kind of compete with them. But, I looked at Bumble and said, okay, it was on my watch list back on February 15th of 2023. And about two videos ago, I want to say early on in the month of like late April, early May, I decided to take it off my watch list. Now, for many of you, you may say, well, how come you took it off? I found something a little bit cheaper. So with that being said, let me just give you an example. Anytime I talk about anything on my watch list, I may or may not buy it. The due diligence that I'm doing on my watch list is putting me in a position that I already have the information. I take this opportunity to be able to share it with the world. At the same time, it allows me to have some accountability. Again, I don't suggest that you buy any of the stocks that I actually look at on my watch list, but I'm telling you today that two of the stocks that were on my watch list going back to February the 1st and also February 15th have hit their mark. Now, if you guys don't know, make sure you check out that video. That's going to be the video that I talked about Shopify, and that other one's going to be about DraftKings. Now, DraftKings at the time, if you go back, you'll notice I actually put in the body, so you can check out the body of this video. You can actually see when I first priced it and then where they end up at. Today, DraftKings is trading at around $23 a share. I had an exit starting around $21 if I decided to purchase that stock. And, here's one of the cool parts about it. I ended up, if I was in the stock now, or if I was or was not in the stock, my evaluation was correct. At the same time, for Shopify, I had that stock trading up, hitting about $57 at the time when I looked. At the time when I looked at it, Shopify was trading, if I'm not mistaken, right around $46. I think it was between $42 to $46 at the time, and I had it priced in hitting above 57. Now, anything I price for my personal, I'm always looking at it as a long term, so it's not like within 12 months. I'm looking 24 months out, 12 to 24 months, normally 24. With that being said, Shop is trading today at above 60. So I had that exit. If I would have decided to buy that stock, or if whether I did or I didn't, I had it to priced in that I was getting out around 57. It is trading at 60. So those are two. I normally have about 10 overall stocks. Now, keep in mind, anything I talk about buying is always in groups of 100. That is considered a round lot. Group of 100 is very important to me. It means I'm 100% in the trade. There's nothing wrong. I understand you can buy one share. I do understand that. But the type of activity that I do, always groups of 100 works best for me. That's my strategy. And I'm always looking at a long term. I'm not necessarily, I understand if you hold a stock less than 9 months, you're looking at a 20% capital gains tax. If you hold it longer, 12 months or longer, you're looking at 10%. So part of my strategy always incorporates, so my personal self, reducing the tax implications on holding the money a little longer than a short-term hold with capital gains. So I save 10% just by holding it over 12 months. And that's the position. I don't have to hold it over 12 months, but I also understand the consequences are I'm going to pay 10% more. Now that you know that, again, in the body, I put my current watch list. I actually, at the same time, I incorporated two stocks that was on my watch list. This all started back on February 1st. It was a way. This is something I've always done. I just normally never really share it with the world. But this is something that I've always done. I've always, whether I shot a video, just me, or I wrote it down in a transcript form, this was my way of holding myself accountable. Now I get a kick out of some of the comments, some of the messages that we get, and they were like, "What are you thinking? You put that on your watch list, man? How about this one?" And I go through evaluation. Well, it was asked before, and I decided to go ahead and do my due diligence on Beyond Meats. Now, if you may not know about Beyond Meats, This stock went public back on May of 2019. So this goes back with a lot of the other stocks that came out in the growth sector. Now, Beyond Meats itself, let's go to a little bit of a deep dive into Beyond Meat so we can get kind of an idea of what it is and how come I'm looking at it now. Now, kind of give you an example. If you're not familiar with the Beyond Meats and you don't see it, they normally got the Beyond Chicken in the grocery store. But here's a couple of things. Beyond Meats is engaged in provisions of providing plant-based meats. Its products include ready-to-eat cooked meat under the Beyond Meats and Beyond Sauces brand, frozen meats, namely Beyond Chicken Strips and Beyond Beef Crumbles. The company was founded by Ethan Brown and Brent Taylor in 2009 and headquartered in El Segundo, California. Now, let's keep that in mind. El Segundo. Always like the name of that. Now, the thing that's interesting about Beyond Meats, just so you guys know, is that this stock, interesting enough, went public at an IPO price of $25 a share. That was the actual price they was writing in. The day it started trading, though, back on May 25th, it actually started trading at $46. So it was above its IPO price. This stock, but going between the start of coming out with the IPO and the restart after the COVID when they opened the market back up. So we're talking about going into the third or fourth quarter of 2020 into 2021, prior to we started seeing some of these rate hikes and everything with the current administration. Beyond Meats got as high as $249. That's right, people, $249. Now, it was so much XX speculation in this stock. And people had asked me before, hey, how come you haven't done, have you considered Beyond Meats on your watch list? At the time they would ask that question, or people would, ask, I would say, well, that's not in my forte, the stock particularly, because you're talking about $249. You're pretty much saying that to buy 100 shares of this, add 2 zeros, you're looking at, $224,000 to buy 100 shares. That is a lot of capital to put into a stock. Now, if you think you purchase this for $24,000 per share, I mean, literally, that's $249 per share. Add 2 zeros, you're talking about $24,900. At its peak, that was the high. It's insane. It's trading today. When I first looked at it, it was trading day around. I always look at the current price. It was trading around $10.02 at around the opening bell this morning. Got up, I believe, at the current price. It's been trading between it opened around between $10.30 and $10.49. But it's time for me to talk about Beyond Meats now, because it didn't make sense for me to talk about it prior to now because the price was ridiculous. It's outside of the grasp of what I like to deploy resources at $100 a share, because now we're talking about a share price that literally costs me for buying 100 shares about $1,000. So if it's trading between $10 to $10.30 to $10.49, we're talking about $1,049. That's what we're talking about to buy 100 shares. Now, how is that important? Because let's go over a couple things. You should, that I have to look at when I'm thinking about Beyond Meats. One, do I have any exposure to plant-based foods? And the answer is today, if you look at my current watch list, the answer was no. I didn't have any exposure. I have exposure to AI. I have exposure to leisure. I have exposure to growth technology stocks, but I don't have any exposure to Beyond Meats. I mean, it's a food processing plant. They do edible food, like processed food. So it's still food processing. Is it any better than a regular food processor? Processing is processing, period. Just so you know about, if you think about plant-based anything, once you cook any green vegetable or any vegetable at all, you kill the pseudo and the phytonutrients in it. So it's now processed. It's dead food, to be quite honest with you. A lot of times you're not supposed to cook at all any of your green vegetables if you want to get the pseudo and those nutrients that you need in your system in order for your body to assimilate. Now, that's important to know because Beyond Meats is in food processing. So you're going to deal with you can talk to nutritionists who specialize in this. You can talk to your cardiologist. You can talk to your doctor. You could talk to any type of somebody in the medical field, and they'll tell you about oxidation, which means where your cells are not getting proper oxidized and they begin to form. And that's the early stages of what you hear the term that everybody's afraid of, cancer. Speak to your medical people; they'll let you know that, and how processed foods may or may not play a role in that. Now, Beyond Meat, Nasdaq symbol BYND, is a turning a corner. Now, recently they came out with their earnings, but I think it's important because this stock started as IPO at $25, started trading at, so the IPO price was 25. I started trading at 46. You have this situation where you ask yourself this question: can it go up anymore? The answer was yes, to $249. Now, over since now again, I'll say this: my opinion, the recession started right around October, November 2021. That is my opinion. That is not the unfortunately, the administration has not announced that. They say we may, but as far as in my opinion, October of 2021 to 2020, October to November is when we actually started going into recession. And that's when you started seeing a lot of companies that are centered around operating with low interest rates start to have issues. You've seen the cryptocurrency begin to collapse. That really started a little bit earlier. That was like in June or July of 2021. And then you've seen the crypto winter, which is through the third or fourth quarter of 2021. And you've seen, we now see that Bitcoin, but a lot of the other the funding tokens, including Ethereum, is all really all low right now. They've gotten hit. A lot of them have been attacked by the Securities and Exchange Commission because it's really funding, not necessarily like a Bitcoin. Bitcoin is the anomaly because it's the only thing that's really a commodity out of all of everything else. Everything else has to be produced and is really used for capital raising. And that causes a problem. And I don't have any exposure to Bitcoin, but now back to Beyond Meats. Now, one of the things that's interesting is that they kind of had a lot of hopes. One of the reasons that it did come down because some of their partnerships kind of didn't work out. And that was with McDonald's. That was with, which is also, stock symbol MCD, Yum Brand, YOUM stock symbol, and PepsiCo. They actually had a problem. They didn't get the relationship that they wanted. So their cash flow from the operations by the end of the year started to be impacted because they didn't really make good deals. They were hopeful, but they didn't make the deals they needed. So that's just something as far as currently. The first quarter results were out May 10th. And when those results came out, and again, it depends on how you look at it. Most companies now that are out there, they're talking about, like real earnings. They're no longer having those conversations about growth and users or anything, talking about real earnings. So some of the problems that the institutions over the last 3 quarters have been selling at a 4-to-1 ratio. I mean, so they've been really, really selling this position. They've been getting rid of Beyond Meats in their overall portfolio. I'll talk about in a few who are the current institutional investors that actually have a stake and been in the Beyond Meats for a while. And they are really tremendously down. I mean, you buy a stock for $249, or even if you bought it in the $100 range, forget it, the $50 range, you're just trading at $10. You're seeing a substantial amount of your money. And Beyond Meats has never done a reverse split. So this price of $10 right now, a little bit higher than 10 is trading at, is not after an adverse event. They have not had that yet. Now they're a company that has not hit profitability. Don't get me wrong. So, but you've seen in the last quarter report on May 10th that Beyond Meats has it's turning a corner. But that turning a corner is going to take some time. And if you purchase this stock overall and you paid anything above the IPO price, and I'm talking about the original price of $25, whoo, you're in a bit situation. So now is the reason that's why I'm looking at it. One of the things about the earnings, it was excellent news. The EBITDA loss narrowed to 50% of additional improvement expected by the end of the fiscal year. The GAAP losses were 92 cents, was better than expected at being at least it was $1 loss. I mean, I don't know how you would look at that. If you want to say, hey, I could have lost $1.01 per share, that's completely per share, or I lost 92 cents per share. That's better than $1. So that's positive news. It's not profitability. So, the original CEOs are there. They're still in the growth stage. You don't have a position with, currently any board members or anything leaving. There's expected to move a little lower. I'm expecting that, when I'm looking at Beyond Meats, again, their next earnings come out on, I believe it's in August 3rd, between August 3rd to August 10th. But I think it makes sense. If I want to have exposure in my personal portfolio to processed foods that are based on plant basis, then it kind of makes sense. Most stocks after they IPO, after an inflationary period like we have, when we talk about, you go back after 2008, you go back to 2000, the ones that survive, that's the key point here. Don't let me denote that I get, if they're able to maintain, they recently, one of the things that tanked their stock was recently Beyond Meats did something that I think that really helped anybody was saying that, hey, I'll buy this stock if it's under 12. Because what Beyond Meats recently did was they did something that it probably did upset a lot of people. If you've been in Beyond Meats and you bought it at a price, they mentioned that they were doing a offering, guys. Oh, that's what really helped it get down the price range. They got me to look at this. So Beyond Meats decided to announce on May that they were going to be raising more funds. They're looking to raise about $200 million, if I'm not mistaken. And in the process of them doing that diluting the current owners of Beyond Meats really down. I mean, like 40% dilution. Now, you may say, well, what does that have to do with anything? If you're entering now, it makes sense because that leaves around a 43% upswing. Again, as I mentioned before, one of the things that traditionally does happen is that stocks, after they go IPO, if they see, especially after an inflationary period, but if they have some hiccups after going public and you overpay for the stock and you have tremendous capitulation, but not a realized loss, unless you sold out. And again, you had the greater food theory taking place in this stock itself because people kept believing, if you bought it at after when it IPO'd at 46, then it goes from 46 to 56, from 56 to 66. And then so on. Then you see it break 100, and then you jumped in this stock. You decided, I'm getting into Beyond Meats. It's the greater food theory. So this thing peaked all the way up, and it rolled up, and you have short sellers jumping in saying that this stock is not worth that, and then they get stopped out, and it shoots the price up. I mean, you got to love short sellers because some short sellers got crushed in the stock, and other short sellers made a lot of money shorting this at $200 and above, all the way down now to 10. It takes a lot of non-emotional trading or non-emotional looking at your portfolio to see something that you've acquired at a higher price capitulate down to $10. Now, if you've never been in that situation, which I have, you only really have a couple of choices that you can make. And for me, my choice has always been, is this a long-term trade? I mean, was my original position long-term? Did I go in heavy? That's the question I need to ask myself. Did I buy 100 shares? Now, if I bought 100 shares and I couldn't afford to buy them at 100 or 50, I mean, you think about it now at $10.47. If you bought at 100, if you bought at 46 or higher, then if it was me, if I thought it was good then, yes, we have inflationary. Rates are high. This is a growth stock in the food processing department where you have is using veggies and is using vegetables in order to make food that looks like it's normal processing. So how does this all play out mentally? Well, let's look at a couple of things. I'm not going to talk about no other analysts. I'm just going to look at what positions that I do, because what good is another analyst's advice if I have to make my own determination? Because if I'm wrong, I'm fine. If they're wrong, I suck because I didn't do my own due diligence. So I'm not really interested in what the analysts may say on this. But let's look at who the major shareholders are in it currently. Okay, some of the current institutional investors that are in this position currently, and then talk about some of the insiders, are Wolverine Asset Management. You got Sigma Investment LP. You have Greenville Capital LP. You have Group One Trading. You have Trading LP. You have some of the insiders that are still there. You got Seth Goldman. You got Terry. Who are some of the key players that's underwriting this too? Because I think this is important for me, maybe not for you, but some of the people that underwrite this was Goldman Sachs, J.P. Morgan, Credit Suisse, and we know how Credit Suisse got in a situation, and they needed to have the banking systems assist them. One of the other things I think is important is Merrill Lynch, Jeffries, and William Blair were co-managers in bringing this to the market. So you say to yourself, they raised $176 million in the initial IPO. They're seeking now to raise $200 million. They're going to dilute the current owners. So if I choose to take a stake at spending 100 shares at $1,000 currently, then there is an opportunity here if I want to be exposed. I'm expecting in the next 2 to 3 quarters that Beyond Meats can have, maybe not have as good. If the Fed's rates raise rates, this can impact this company who's raising capital at this particular point, trying to get 200 million to continue their operations. There's a dilution. They did not do it, which it would have made more sense to me if they didn't want the stock to be impeded, to raise capital after they went public when the stock was over 200 million, but prior to my opinion of the recession taking place in October and November 2021, because it could have been masked. I think this, by them doing it at this time, it actually caused a lot of the people who were already skittish to bring this price down. So it's probably going to bounce off. It may get as low as $8. I could be wrong, but I think it's another $2 in there with another rate increase. So that puts the position where around between $8 to $10 for me. It makes sense to, if I'm going to take the position, between $7 to $10, to be honest with you. Expectation that this stock will, in my opinion, I believe it will hit the initial IPO price. I can't tell you about that 46 we started trading, but I do believe if there's a new administration and they don't raise rates and they start to cut rates, I can see this going back in the next 24 months, max 36 months, but really 24 months, hitting that 25. So it makes a lot of sense because I see that there's a possibility of $15 in this trade. And this trade to me is even better than a DraftKings and a Shopify for me, because both of this position, it costs less. And if I took the position in both of those, based on how much money, that's the reason I always say you got to have 100 shares, because based on that amount of money I needed to have, I need to make sure that I can, how can I maximize it? So I see that being, a precedent for me at the same time. But that's if I'm willing to be exposed, because I have some current positions in my watch list that's a little bit more economical. Now, let me go into Bumble. So let me just tell you, I added Beyond Meats to my watch list. I think it's a good position. If I want to be exposed to meat in my overall portfolio, and if I have some money not set aside that I may be bringing in cost dollar averaging into some of my other positions that's on my watch list. But now I go back to the Bumble, because Bumble, to me, to be honest with you, that's an Albee company, Shelby Albee, the actress, and it makes sense. Bumble has now came back on the list, so I'm adding that back to my watch list. I took it off before. Everything still remains the same. When it comes to Bumble, I still see Bumble as I've seen it before, that this is actually a $38 stock, again, because we're sitting in a position where we are, it's a growth stock. It is technology. It's web-based. It's a dating app. It competes with Match.com. It competes with a lot of other ones as well. But to me, the one who is the king of kings in that sector is Match.com. And when I'm looking at this, when I first looked at it, it was $26.50. It's currently, the last time I checked, is around $16.71 per share. I still believe it's a $38.72 exit. I believe it can go $2 lower, especially if they're going to raise rates. So that puts it as low as around 14. It may possibly drop a little bit lower that. That plays a major role, in my opinion, if we're just looking at saying, okay, let me look at my watch list. I think on my watch list, there's some stocks that's $1,000 or less. But then you go again. I'm right around that same thing where it's like a $15 swing. So if all I have access to is around $1,500, gotta have it first around. Actually $1,671 about 100 shares, priced at around $38.72. I gotta watch about downside capitulation of about another $2 that possibly puts me in at around $14. It can go around $14 even, or maybe even down to $12. That's the $4 protection I got to think about. At the same time, in my watch list for any positions I did take or currently sitting in, could I exit those and reduce the amount of money that I'm using to expose you to downside losses? And that's a question that's to be seen. But on today, I just want to make sure that I took the opportunity to tell you guys. Again, a lot of the information is in the body if you want to go back and get a little bit more details, because I want to make sure I keep my videos under 25 minutes. I think that's better suited for time, especially mine. And at the same time, it kind of gives you an idea when we come together. Again, don't forget to like, subscribe, tell your friends about our channel itself. We just don't talk about stocks on this channel. Uh, you know, I may mention my personal watch list, but I just don't talk about that. I also talk about business as well. We are a CFS Studios is a marketing company. So we also do things in marketing and consulting for marketing. As Cash Flow Stewardship is a consulting company, so we assist people with businesses, and that's important to know as well. So when it comes into thinking about the way you enter a transaction dictate the outcome. If you are looking for any type of assistance when it comes to your business, make sure you definitely check us out on Mondays. If you're saying, man, I really need some assistance, my business is not doing too well during this inflationary time, never hesitate. Check us out online at cashflowstewardship.com or call us at the office, speak to one of our associates. That's at 402-804 3777. Again, it's 402-804-3777. One of our associates would definitely assist you, do due diligence and make sure that what you're doing. And it's just, again, it's business consulting and business, and then helping you looking at how you can strengthen your net operating income, or maybe you may be spending money in ways that do not give a return. That's crucial. At the same time, just keep that things in mind. If you're a person right now and you are looking to get involved in business, just know that this is the best time to get in business, because it may be years again before you deal with any type of inflationary time. This is the best time actually for me to really get in the stock market, because if I've never been in a recession, then I need to learn how to navigate a recession. I need to learn how to trade and be profitable during this recession, because it may be 10 years. I mean, it started again, this is my opinion, October to November. The recession started for me. For everyone else, they might have said you may hear the administration come out and say it really started third or fourth quarter of 2023. I totally 100% have a different view than they do. I understand that for each person, they have to come up to their own determination. But based on the stocks that I have, my watch list, and based on the position that I choose to take, to me, the recession has already happened, because I see how they have caused a lot of the bottlenecks in just policy. I mean, we're talking about right now cyclical stocks that's not normally cyclical are being considered cyclical because of policy. I mean, you got defensive stocks that normally have a very strong defensive that also seen some adverse effects on their stock, and they defensive, which means it's not correlated to anything that the market is doing, but it's definitely being affected by what the administration is doing. So, keep that in mind. If you are a singer, if you're a songwriter, if you write books, and you need consulting, definitely reach out. Put a message in the chat. We'll link you up with VCI, who has a voice coach over at their department, and they could definitely assist you guys to make sure you get your song written properly. And if you got book, we also have a company we're working with that can assist you in getting that, consulting you on your book ideas. Again, if you need those assistants, that's what Monday show's about. Coming up on Friday, you got the slate. That's when Josue and Nate will be on, and they'll be talking, and that's part of the film division of our CFS Studios. If you've never seen that, definitely check out that. Don't forget to like, subscribe, and we look forward to talking to you again. See you next Wednesday. Actually, I'll see you Monday, and then I'll talk to you guys again on Wednesday. Have a great day. This will be on review, so you can go back and you can watch it. Check out the body. A lot of the information there. If you already missed the show, don't forget to like, subscribe, and do your best to grow your wealth. Have a great day.